afternoon, everyone, and welcome to Stock Market Today. Ali Corman-Kinshrieve here with a breakdown of the action in today's session, where we saw a strong finish to the day tied to perhaps some of that debt ceiling news, Ken.
Yes, kind of a rare bullish close for the stock market, where we get a close near highs and three stocks flexing their muscle today. We'll take a look at Marvell Technology Group, had a pretty bullish investor day today. Also digital Turbine, which is near a buy point, and finally Atlassian, which is just has a nice relative strength line and making a nice pullback to its 10-week line.
All right, well, first look at the major indexes. Here is the NASDAQ Composite, which finished the day up about 0.5%. We have the S&P up 0.4%, the Dow up 0.3%. Small caps lagging today, down about 0.7% by session's close. This chart is slightly delayed here, but if we take a look at the NASDAQ 100 ETF QQQ on the intraday, you can see how after kind of a sloppy morning, stocks found their stride and also kicked it into high gear in the last 15 minutes or so of trade.
Yeah, so basically, a lot of CEOs met with President Biden today, and then President Biden nudged Senate Minority Leader Mitch McConnell to get some work done on the debt ceiling here. So McConnell offered a short-term suspension of the U.S. debt ceiling, which means they're going to be able to go past that October 18th deadline. So that's the news that moved the market. They're going to kick the can down the road a little while longer, but it was good to see a nice volume into the market late in the day, and obviously still in the early stages of a rally attempt here, with the market still in a correction. And but we'll take a close near highs anytime we can get it.
Yeah, so another step in the right direction. This is now day 2 of the rally attempt for the NASDAQ and the S&P 500. And for the Dow, today was day 4. And so the Dow finishing in the green by about 0.3%. So not a big enough gain for a follow-through day, but perhaps if we do see a strong day tomorrow, that's when we could see a follow-through day.
Yeah, and don't forget we've got a pretty pivotal jobs report on Friday. We got some pretty good economic data before the open, where the ADP private payroll report came in much better than expected. So that could fuel hopes that Friday's jobs report could be a little better than expected. This is being closely watched by the Fed. You know, they're going to meet in November, and they're widely expected to announce specifics of when the tapering will start, and it could start as early as December. And if we do get a pretty robust jobs report, that might all but cement the Fed's move later this year.
Okay, and taking a look at some individual names, Marvell Technology, MRVL, on our radar with a 7% gain today. Heavy volume behind the move, and I like seeing that RS line blue dot on the daily too, Ken.
Yeah, definitely. It kind of just sticks out here, and this one really just came right up off its bottom. It does have a flat base here with a buy point of 64.17, 10 cents above that left side high. But you're right, heavy volume in the stock today. The company, a lot of Investors Day going on lately, and Marvell was the latest. You can see the company's annual earnings estimates. Their main business is networking and storage, but they've also made a lot of inroads recently in data center infrastructure, obviously a very fast growing area of the market. So they upped their long-term growth forecast. You can see they're already very, very strong for fiscal 22 and 2023. So this is definitely one to watch. It's a very difficult environment for technical breakouts right now, when institutional investors have generally been selling stocks. So, but still, we've been, going over some pretty good technical setups in recent days. This one could continue to be a leader if the market can start running higher here.
Among those watch list names for sure. And this group ranked 7 out of 197, the Semiconductor Fabless group. So we will have to see if Marvell can follow through tomorrow with a breakout. And a Digital Turbine, ticker APPS, with another up day today. It gained 1.9%, and a strong day on Tuesday sent the stock 6% higher. So following up on that gain in a sort of handle-like pattern pull back to that converging 200-day and 21-day line.
Yeah, and ever since the stock hit a low of 47.57 several weeks ago, you're definitely seeing some signs of accumulation in this stock. You got some above average volume price gains, really not much in the way of selling volume either. So this is a stock, it's still far off its highs, but kind of just underneath a buy point here. And it's definitely a breakout candidate. 76.70 is the level that we're looking at. That's the stock's recent high. It's pretty close to that. So it's an interesting technology too. This company basically helps businesses, monetize mobile content. So or help companies generate revenue through their mobile content. That's certainly another fast-growing area of the market. So Digital Turbine,
Definitely.
another stock that seems well positioned for growth here.
Okay, and an enterprise software peer worth looking at is Atlassian. Ticker is team there. And Ken, you highlighted this one today on IBD Live for a good reason.
Yeah, I mean, we're seeing a handful of stocks that really don't seem interested in testing their 50-day lines. They're kind of trading right at their 21-day moving averages. We saw a very bullish move for a firm today, also a name like Upstart. So a lot of these stocks showing strength. Atlassian, the same thing, just a nice test of the 21-day moving average here. Even though it's still far above its 50-day moving average, if you swing over to the weekly chart, you can see a stock that's pretty much testing the 10-week line right here. So in a normal market environment where we're in a confirmed uptrend and we're not worried about institutional selling in the market, this stock would definitely be in a buy zone. It's just held gains nicely after that very bullish earnings report in July, and this looks like just a legitimate first test of the 10-week line. So like the look of Atlassian quite a bit here.
Yeah, it's about 5.5% above the 10-week line right now. Okay, Ken. So it does seem like there are a number of setups out there. So if we do just going through the scenario analysis, we may not get a follow through day tomorrow. But if we do, what should investors be doing? Start putting some money to work, not going all in, but it seems like they could start putting their toe in the water.
Yeah, I mean there are some stocks out there that are in buy zones right now. The issue is that the market has come down, what, 6-7% off its high, and it's been a pretty quick pullback. So has that really given stocks enough time to form bases? Well, probably not, but it has given plenty of stocks time to come down to key support levels, and some of the big leaders are finding support. So you'll be able to find some actionable opportunities, maybe with stocks just bouncing off their 10-week lines, maybe some base breakouts. But IBD growth screens do a good job of presenting these stocks if we do get confirmation of a new uptrend. That still hasn't played out yet. Like you said, the Dow is the first index that could potentially follow through. The Nasdaq and S&P 500 still are earlier in their rally attempts. So, but when we do get that follow through day, we'll do a good job of uncovering these stocks and writing about them for sure on investors.com.
That we will, and following closely on IBD Live too. So we hope you check out tomorrow's show. It'll be another good one. Investors.com/IBD Live for all the details there. Tomorrow, after the close, we will also have our monthly Swing Trader Scorecard webinar. So if you are a subscriber or a trialist, make sure you check that out, where we're breaking down the action that we saw in the month of September and talking about some current trades. A firm today, a huge mover. So well done to the Swing Trader team on that one today. We look forward to seeing you there, swingtrader.investors.com. Thanks, Ken, for your spot on analysis as always. And thank you all for watching. We'll see you right back here tomorrow.